All right, good morning, folks. Wanted to Tim Davis here. I wanted to come to you guys and give you guys a quick update. Quick update on the VIX. The VIX is really starting to show us that there's still a lot of issues, a lot of problems within our economy, our markets, overall, and we're still in this bear market, and VIX is a telltale signal. So we've been in this downward sloping channel for the VIX probably for since around here. Since VIX got that spike up back in on the early part of March, the VIX sold right back off and headed right back down to the bottom of this range. And I was telling folks to be wary, even though the VIX seemed like it was going a lot lower than what it was before. Be wary because this is just an area where they got to 15 or 16. This is still a general area where the VIX has found a way to bounce in the past within this bear market, and we're still not out of this bear market. So telling folks to just hold tight and be wary and be watchful, because the VIX will find a way to bounce since we're still in this bear market, and it looks like that's what's transpiring right now. So that is another key signal that prepare for volatility and rough sailing ahead in the overall indices. Probably, from now, probably throughout the summer, things are probably about to get rough. Markets had their fair share of of this bear market bounce since October. And I think a lot of that is about to come to an end and about to come to a rough sailing, about to say rough sailing for the general markets probably throughout the summer. One of the reasons being another fire has been another source has been added to the fire to help fuel this downward trend, which is the turmoil with the banking sector with a lot of these regional banks, which I think is going to end up being spillover, folks. A lot of folks, you hear a lot of politicians and some economists keep saying that, not a lot of economists, but a lot of politicians keep saying, and those within the financial world, oh, it's just a one-off. Next thing you know, there's another bank to fall. Okay, it's just those couple. The next thing you know, there's another bank to fall. I'll put a list on our Discord that I'm on to show you guys some of the regional banks that are still in the crosshairs, and because we're gonna could start to see more dominoes fall one after another, and that's just going to do nothing but put more pressure on the overall markets. In addition to everything else that's going on, what I'm saying, with the economy, with the interest rates, with the wars and rumors of wars, with the tension between China and Taiwan, with everything that's going on in Ukraine, and um, the overall markets, it's not in a good shape, folks. Just put it to you that way. So since October, as you can see, what the VIX did in general, since October here, so the VIX pretty much came back down to a low. Then it got a little spike up here, which pretty much back in March to give us a fair warning that VIX is probably ready for another possible big bounce. And now it looks like we are at this area here where we're probably about to really start to take off in the VIX. Look at the wins percentage, is already starting to hinge higher. This is a weekly chart, too, folks. I focus on the longer term charts just because they're going to tell you what's really happening beneath the surface and where we really stand. Looks like the weekly chart is showing that we're about to come out of the oversold territory in the VIX. And look at this huge hinge up in RSI and in the VIX on the weekly chart. So with that said, probably going to see the VIX has some sustainable moves to upside. And if and only if, well, and I think that more than likely probably going to happen, VIX crosses this area here, which is around 20 to 23 level on weekly chart, and hold above that level, it's probably going to be off to the races for the VIX in a big way. So that's something to pay close attention to and something to watch. Again, if you look at what's happening with a lot of these regional banks, folks, there's a lot more that's beneath the sails that are starting to crack. It's starting to crack, and try to share just a few of those with you now, and that's going to put pressure on the overall market. So RF is a regional financial bank, and it is starting to crack. You see this big red candle on the weekly chart here. It's starting to crack in a major way. And let me do this. I want to show you guys the real effects by looking at a longer term chart and what these things are setting up for. Here's a monthly chart of RF. And see all the consolidation towards the top of the range, and all of a sudden now it's in a new strong downward trend on the monthly charts, folks. It's just been demolished. That's one. And this is going to do nothing but put pressure on our overall markets. And we all seen what happened with Pac West overnight. Pac West, look at that monthly chart. It's just being demolished. It's a monthly chart of Pac West. Here's another one, ZION, Zion. It's just unloading. Here's another one, CFR. Just starting this downward trend on a monthly chart, and it's starting to break below its 50-period moving average already on a monthly chart. TFC. It's another one. It's just already debilitated below its 50 and 200-day moving average on the monthly chart. You got CMA. Another one that's just totally being broken down. TFC. All these regionals. Key West. One that a lot of people probably know and heard of. It's also starting to show some chinks in the armor is M&T Bank, folks. M&T Bank, look at that. That monthly chart is just breaking down. USB. And then take a look at the KRE, which is the regional banking ETF. It's just breaking down. So eventually that will spill over some kind of way in our regular markets. Here's our XLF. It's trying to hold above water, but eventually I think it's going to, this is a monthly chart on XLF. It is threatening to break also below a major moving average, folks, XLF. So wanted to point that out. Be wary of what's happening. And me personally, I have been sitting in some of these financial banks on the put side, and I've just been sitting waiting for the shoe to drop, and the shoe's been starting to drop. One of them that I entered was a put spread a while ago on Alley, and it's starting to break down with everything else. It's been breaking down for a while, so this one has been working out pretty well. Alley Financial. BK, not necessarily regional bank, but within that sector, in that financial sector, also starting to break down. It's another one that I had put spreads on as well. And USB. Yes, US Bank Corp is another one that I have put spreads on as well. As you can see, trade's been working out pretty well. Because of I expect all the volatility, I suspect that we can possibly see this summer. I also entered a bullish position on the UVXY because I think this summer we could start to see an acceleration in the acceleration in volatility. And I think the UVXY is a very inexpensive way to play volatility if we expect to see some big moves as we head into the summer. So that is the one that I entered some call positions on. So just wanted to give you guys the heads up on, pay attention to what's going on with our overall markets, pay attention to what's happening with the VIX, folks. The VIX is really starting to show us where we are about to head, where we are heading. So the VIX is a good barometer to tell the temperature of the overall markets. All right, until the next video, I'll catch you guys later. Tim Davis signing off.